I have already witnessed how homeowners are facing a real crisis in the insurance industry. I recently talked to a woman named Lynn, who told me that her parents' insurance company had canceled their policy a few months ago, deciding to leave the state and discontinue fire coverage. They survived it, but now they don't have fire insurance. What have major insurance companies done in recent years? The situation Lynn described turned out to be quite typical. Many insurers refused to renew their policies. For example, 2.8 million policies were canceled in California from 2020 to 2021. Lynn said that her parents' insurance, which had been in effect for 70 years, was canceled because their area was recognized as a fire risk zone. This is the story I often hear from homeowners in California. They literally can't find a company that will agree to insure their property. Over the past 4 years, 10 major insurers have either left the state or reduced coverage in California. And more importantly, during this time, the number of homeowners applying to the state insurance company of last resort has doubled. But there is also good news. Lynn's house and her family remained intact, although 5 other houses directly opposite their house burned to the ground. Fortunately, their house, for which the policy was canceled, survived. But in the future, it can be expected that insurance companies will be even less willing to provide policies, which will create serious problems for the State Reserve Fund. This is true because the fund depends on contributions from insurers. The estimated losses that are insured already exceed $20 billion, which means that rebuilding these communities in the future will cost incredible money. In addition, natural disasters are occurring more frequently, and more insurers are leaving the state. We see how the cost of insurance is increasing and the availability is decreasing. However, California is not the only state facing similar problems. Will this change the insurance market in general across the country? The short answer is maybe, and a longer one, yes. It does change the situation, making it more expensive. Take, for example, Florida, which has already faced its own problems due to hurricanes. Policyholders there now pay almost 5 times more than the national average rate because of what they face. Of course, there are regions with less climate problems, but in general, even though this issue is being resolved at the state level and insurers make decisions based on local conditions, the situation as a whole is becoming more difficult. I also want to say a few words to those who are facing losses due to fires, because I have talked to people who have experienced similar things. The best advice they received was to hire an independent appraiser to help them get the best possible refund from the insurance company. This is something that families experiencing such tragedies should consider.